Hello, everybody. Thank you for joining us for today's public webinar, Last Look Prior to Wednesday's Inflationary Release. Just as a quick notice, we decided to do a summer intensive, and that is going to run for the month of June, and that's going to be from June 3rd to 28th. And today is also today and tomorrow is the last day to sign up for the live market profile primer because it starts tomorrow morning. So just make note, we will not be having a summer primer. So if you are wanting to join us for a primer, you might want to do that today so I can get you registered and all set and ready for tomorrow morning's class. Good morning, Jim.
Good morning. Okay, the thing that strikes me again is this idea that of market-generated information. I remember the last question, the last public webinar we did, and at least if Jen phrased it the way it was asked, it really wasn't a question. It was somebody looking for validation. And I remember they said, you would agree that the market is weak. And I looked at the market and the market was balanced, not weak. But what it reminds me of that we get these biases in our mind, probably based on price. But some of the things that go through my mind that affect this, they may be interest rates rising or falling. Is the market, trending or rotational? Do we see, we have earnings coming out? You can go on and on. I have a list here of probably over 20 items that people reflect on, and all of a sudden they can look at one piece of information and that'll turn them bullish or bearish, for the next few minutes or something. And that's just not very sensical. When you look at this market, for example, I'm looking at the profile from yesterday. There is no excess on yesterday's high. I come back and I look at there's only a couple of ticks of excess at the all-time high and no excess on the next high. So what that tells me is there has been, the chances are what we've seen is liquidation. When I say liquidation, that means selling of existing positions versus a more powerful combination of new money selling and liquidation. And remember, if a market gets too long, that can actually weaken the market on a short-term basis, because sometimes markets have to break before they can rally. So, if you get mesmerized by price, you may find out that it's a very difficult market environment. When I look at, for example, last night, the market, overnight low yesterday was lower, came in, we got a break late in the day, and then the market's back up here this morning. There was no excess on yesterday's high. Okay, that's a piece of market generated information. Now, I'm human like everybody else. That market went home last night. When I went home last night, I saw the price. I saw the market going up yesterday. Many of the references were really weak. The L period or the I period reference, came from exactly the settle. K period was just a tick or two off the settle. So I knew those were weak on the day time frame basis. And then, of course, late in the day, the market breaks through this. So the last thing you see is the market trading lower. And it is very easy to get very bearish in your mind or, negative on the market. I looked at these, I looked at the market generated information, and I must admit, I had to close my eyes. I mean, I have some hedges on that have a little bit to the downside, but I had to close my eyes, and I bought the 52.60 calls just after the market broke yesterday. And that was based on market generated information. Had I not been looking at market generated information, I couldn't have made that. I couldn't have made that because the last thing I saw was prices going lower. And I knew that yesterday's rallies were all, weak because they were constantly coming from existing mechanical references. So short-term traders were, kind of buying every little dip yesterday. But anyhow, the point I'm trying to make is the last thing I saw yesterday was the price going down. And it's so easy, to get to the point and think, boy, the market is really weak. And yet, when I look at market generated information, it said no. So I usually have some kind of hedged position. But at that point in time, I adjusted my hedge by buying the 5260 calls. Now, as the market ran up near the overnight high, okay, I actually hedged that. I went short some futures against the calls. So I've hedged that. But the point I'm trying to make here is look at market generated information, because there's always something. You can come in this morning and maybe your favorite technician, and I'll just use the guy, I forget the guy's, I think his name's Tom Lee, from Funstat or something like that. I saw a thing over the weekend. He said, there's still some power in the tank, or some energy in the tank or something. So he still has, bullish. Then you pick up this morning, the paper this morning, and there's Jamie Dimon talking about interest rates could go to, or I guess he said it yesterday, could go to 8%, and it could be a hard landing now. So whatever you want to get, whatever view you want to get, somebody out there will support you. And then you get that confirmation bias, and all of a sudden you think, boy, I got company. And I've fallen trapped for that over the years. What I've learned to do is look at market generated information. What does market generated information tell me? Because that is a composite of everybody, and it's real money, orders entered by real people. So where are we right now? Yesterday was an inside balancing day. Today we're going to open near the upper end of yesterday's range, at least if we open in the next 20 minutes or so. So people are going to be positioning themselves for the, I think it's CPI, I can't remember. I think it's CPI tomorrow. And then you've got, I think, PPI in the following day. But also, don't forget, earnings season starts to get underway on Thursday. So we've got several of the big banks start to report on Thursday. So earnings season is getting underway. So we've got a lot of information. I'm sure there's going to be an awful lot of cross currents in here. And my point is, come out, use market generated information. Now, I have no bias for today. I have no bias in here at all today. I say I'm hedged. I bought the calls. I did some hedging even against the calls. We're opening within yesterday's range. I will focus on developing value, but very much aware that you've got the numbers, the inflationary numbers start tomorrow and Wednesday, and then earnings. Okay, let's do a little commercial, and then we'll start taking some questions.
Okay.
We've got the Jen mentioned it earlier, and then I go back and Jen can give a deeper commercial. But we've got the primer that starts tomorrow. The primer runs for 8 days. The first 4 days are linear. The last 4 days are related to the market. They're interactive with the market, and I do a report prior to each of the last 4 days, a daily report to have some view of the market prior to the opening. The primer is really for those people that may have heard of us. They're not sure if they want to spend the bigger bucks for the more advanced courses and the intensives, but it's an inexpensive way to get either a refresher or a look at what we do. As Jen mentioned earlier, The big course, the intensive, we're going to do one in June. We will not do a primer this summer because I'm going to be traveling, but we have an intensive that starts in June. The primer does not qualify you for the intensive. The only thing that qualifies you for the intensive is having attended a prior intensive or having completed the foundational e-course. Let me turn it over to Jen. Jen, do a short commercial, and then we'll come back and take questions on the market. Thank you.
Okay, and right now we've got special limited time bundles that are discounted. So you get a nice discount for purchasing more than one course. So if you're wanting to do the intensive with us and you need the prerequisite requirement of the foundation e-course, you can purchase the bundle, and you'll find those on our courses page. Obviously, the primer is still featured up at the top because this class starts tomorrow. That is an 8-day course. And then if you scroll down on the page, you'll find the intensive under that, and then the different bundles that we have, discounted bundles that we have available. Right now, we are in our early bird purchasing period, and purchasing early for the intensive will always yield you the best price. So for these first 2 weeks, basically until April 21st, which is the first 2 weeks since we've released this, you get the best pricing on the intensive and these bundles that we have available. And if you're not interested in doing the intensive yet, maybe you just want to do the foundation, you can find that here. And then, of course, our advanced nuances as well. But like I said, we do have these limited time bundles. And if you have any questions about which course is right for you, by all means, contact us at dalton@jimdaltontrading.com, or you can give me a call and I'd be happy to speak with you and answer any questions that you may have and make sure it's a good fit for you. And like Jim said, you have to have the foundation and application of the market profile e-course in order to be able to join us for the intensive. The only exception is if you can be grandfathered in because you have taken a prior intensive, and we can verify it. So please do not make the mistake of purchasing the intensive thinking you can just get by, or that, ask us for a test or an interview or that type of thing. We just don't do that. Why? Because we want people to have the knowledge as Jim intended, those foundational basics before taking the intensives, because we pretty much hit the ground running in there. So, okay. Anything else to mention, Jim? Oh, during I wanted to specifically mention for the primer, if you purchase the primer, you have access to all materials for 3 months after the course finishes. All the live webinars are recorded. You do not need to have any market profile software in order to take that course, and there's no prerequisite for the primer. And for the intensive, obviously you need to have the prerequisite of the foundation e-course, but if you purchase that, the intensive, you will get access to materials for a period of 1 year after the course finishes, so that you've got time to review again and again. And also, we understand people live in different time zones. They can't always join us for all of the webinars live, or you have a day job for which you may not be able to attend all of the sessions live. And for our e-course purchases, when you purchase an e-course from us, you get access to it for 3 years from date of purchase. And if we add any new lessons during that 3-year period of time, you automatically get access to those. Okay?
Thank you. Let's get some questions.
Yep. Let me give you the screen back. There you go, Jim.
Thank you.
Okay. Okay, we've had two back-to-back inside days, Friday and yesterday, inside day rules in play. But would that constitute a failed breakout if these rules?
Yeah, too many times people are looking for the one simple answer. Give me the magic of failed breakout. I mean, any day, whether it's a single day or a balanced day, either one. Don't concentrate on that. Take a look and see what is the market doing. So yesterday is an inside day, right? So we do look, for the breakout from an inside day, and I'm focused on yesterday. And so we said earlier that we had no excess yesterday in there, so there was no real completion to that day. we're coming in today. Here's the settle. Now, the overnight inventory is long. The market was very short on the close yesterday. Overnight inventory is now long. So the odds favor a counter auction or correction of overnight inventory. Okay, what else have we got?
Okay, and your charts are looking a little different. So are you currently in one tick increment, Jim?
I don't know. I'm probably
I
in,
think you are, because the ranges weren't quite as big. So I mean, I was gonna say your charts look like they might be in one.
I'm in one today, yeah.
Okay, just for clarification, so we don't confuse folks. Okay, you mentioned yesterday was a balance day. Can you also look at the market being in a larger 3-day balance?
I don't think it's so much a 3-day balance as it just, I'm going to pull up well, first of all, I had the VIX up. I was looking at the VIX, with the balance, the VIX did narrow yesterday. But what I think is more important on this market is if you look, you've got a 1, 2, 3, 4, you've got actually a 5-day balance. You had an outside day here, you had an inside day yesterday. But I think what's really going on is I've noticed the market has been focused on this trend line. And you're right at the trend line. I mean, I don't see any sign of really long-term money in here. I think it's mostly short-term money in the way it traded yesterday. Looked like it was all or almost all very short-term traders, and they have a tendency to focus on the trend line. So my focus is the trend line this morning. Of course, then you got the 5-day balance, but more importantly, to start with, I'm focused on the trend line this morning. Okay, what else?
We have a low in the overnight session from last Thursday and a high in the overnight session from last Sunday night. Does one have more importance over the other?
No, just I did. You can get too concentrated on things like that. Remember, I mean, put everything in perspective. The market is positioning itself for another look at inflationary numbers in the next couple of days, followed by earnings. I think that's what's more important than anything. You don't have any real meaningful excess on the high. You don't have a lot of conviction in here. So I think you just want to stay. The market is balanced in here. Focus on that trend line, and instead of looking out for the all-time high, the lows. Look as a short-term trader, and I say short-term trader. Our emphasis is mostly on day trading, and to start with, right now, coming out of the inside day, I want to see, a short-term basis, what do we get? Do we get follow through or not? Do we get a correction to overnight inventory? Okay.
Okay. April 4th was liquidation. The market got too short. Yesterday and the day before combined was a P formation or short covering. Basically, from the all-time high to the low of the 4th is a balance area.
Well, I look at it, and here I'll put the chart back up again. I mean, that's what when I looked at this, I said, if you want to talk it, you've got a 5-day balance in there. I mean, you had the high and the low in there, and so you bet. But I think looking at that right now, where we are, I think can mislead you. I think the most important thing right now is going to be the trend line today, unless there's some evidence that the longer time frame, shows its head today, and that's they usually don't come in the day before the big important numbers. If they're going to do something, they usually make the adjustment the day before. Okay. But I think the start this morning, you've got a couple of things. You've got the trend line, and then you've got the inside day. Go with a breakout from the inside day. It's the simple balanced trading guidelines, and they're on a tiny basis. They're applicable to an inside bar, applicable to an inside day. What are the balanced trading guidelines? Go with a breakout from balance, fade a breakout from balance that fails. If the breakout goes the upside and fails, monitor for continuation in there. But remember, more than likely, today is, unless there's some big news, today is getting the market set up for the start of the real information starts to come out tomorrow, Thursday, and then I say big time earnings on Thursday. Okay?
Okay. Are you giving any importance to the potential for a small gap up today?
Not really. I'm looking at the, I'm more focused on the non-excess high from the day before, from the 5th. That's really where my focus is.
Okay. What are your thoughts on gold rallying?
Well, and that's interesting because when I opened up the conversation this morning, what I was really trying to say when you're talking about, looking at market generated information, if you want to get bearish, you can say, oh, gold's making all these new highs, new all-time highs. Oh, and look at crude, and you can look at those things to make you bearish. You can listen to Jamie Dimon making bearish. You can listen to the FundStat technician to make you bullish. There's anything you want to hear out there. You see a lot of the fundamentalists tell you that there's still earnings. I scanned the earnings announcements this morning. They have, just one of these silly little articles that says, earnings reports this morning, and every one of them was out this morning. I think there was 7 or 8 of them, and each one of them was up a little bit because there was some positive news on it. So I think there's some confusion out there. In one way, it's healthy because you can find any argument you want. Some people, I talked to somebody, they're focused on gold. And oh boy, look at the gold's making these new all-time high, and the metals, and boy, that's inflationary. It may be down the road, but remember, the majority of what we do and the majority of our client base, we are day time frame, short-term traders. And if you really want to mess up your short-term trading, start focusing on all those other things that could give you cognitive dissonance. Short-term trading is so heavily dependent upon short-term inventory getting too long and too short. Now, occasionally you will see, something, come in and take the market. I mean, like, last Thursday was, an unusual day. You had oil and you had some Fed speakers come up. But, and that could have gotten you, like somebody said, but that could have got you really bearish, right? And, there's no real excess down here. But guess what? It all came back. Just got inventory too short. Look at market generated information. That's going to give you, that is the best way to get rid of biases out there that you can possibly use, because this is what real money is doing. It's real people with real money. It's not a talking suit. It's not me. It's just looking at what the market is telling you. Okay, what else?
Okay. Somebody said, I'm new to market profile. Can you explain how does market profile help you make trading decisions?
All market profile is a distribution curve. And all a distribution curve does is organize the data. You've got, time as a constant, price as a variable. And that's, you need to have a distribution curve. You need a constant and a variable. This is what scientists have done for years to organize data. Once the data is organized, you have a better opportunity or easier to extract relevant information from that data. The market profile does not tell you to buy. It does not tell you to sell. All it is a tool that helps you organize the market. Scientists have done this for years. Okay, what else?
Okay, I think that's it for our questions.
All right, let me tell you, have a great day. The big thing today, just as we leave here, I'm going to use the high from the 5th and saying, do we look above it and fail, do we look above it and find acceptance? Or if we just stayed within that range, then the market is just tightening the balance prior to the news starting tomorrow and Thursday. Okay. Thank you much. Have a great trading day. Bye now.
Thank you so much, everybody. Have a great rest of your week. Bye.